So if you've ever wondered how the rich actually avoid paying taxes, you see all these news articles all the time, how extremely wealthy people have avoided paying taxes over the lifetime of their wealth building career. And today, I'm going to show you exactly how you can do that too. See, looking at your taxes is not something that's only available to rich people. Anybody can actually find legal ways to avoid taxes. You just have to understand what to do, and you have to have the knowledge as to what to do. And one of the best ways to do this, before we get into the number of ways that you can actually avoid paying taxes, is get a great accountant on your side. Because if you have a great accountant on your side, they can find loopholes for you that are in the tax code so that you can go about actually saving a significant sum of taxes every single year. For example, my accountant saves me thousands of dollars every single year because he's up to date on the tax codes and looks through each year what the tax code updates are and finds different ways that I can apply them to my personal taxes. The first one is take advantage of retirement accounts. So you can look at things like a Roth IRA or a 401k. Both of those are a tremendous way to save money on taxes. For example, the Roth IRA, you pay taxes when you start to put your money into a Roth IRA. The money grows tax-free, and then you can take the money out tax-free. Whereas if you're opening a 401k at your employer or something like that, a 401k allows you to put money in and you defer the taxes of the money that you put into the account, and then your money grows, and then you pay taxes when you pull it out. So these are great ways to take advantage of tax savings and allow your money to grow tax-free for a long period of time. Because once that happens, you can build tremendous wealth on a small amount of money, because these tax savings are six-figure differentials if you go about doing that. The second one is to open a health savings account. And what a health savings account is it's for people who have high deductible health plan. And if you have a high deductible health plan, you can take advantage of an HSA. And this is an account that you can put money in tax-free, invest it, and it grows tax-free, and you can take the money out tax-free. And the only caveat is when you take the money out, you have to have a qualified medical expense to do that. But here's the kicker. There's no timeline as to when the medical expense had to happen. So you could be saving your receipts for 40 years and then start pulling money out of your HSA tax-free. The third way to legally avoid paying taxes is to invest in real estate. Real estate has a number of tax benefits, from deductions where you can deduct your taxes, your insurance, any expenses you have associated with the property. All of those can be deducted and tax deferred over time. Then you have depreciation, where you can write off the property's loss in value over time. And there's loopholes like the 1031 exchange, where you can sell a property, and instead of paying taxes on the gains on that property, you can actually defer those taxes to a like-kind property and buy another property. There's so many different ways that you can save taxes in real estate that it really is a tax efficiency hack. So I would look at investing in real estate if you're looking for additional legal ways to avoid paying taxes. Hey, real quick, give this video a like. Number 4 is to start a business. With a business, you can deduct all sorts of things, from your cell phone bill, your mileage on your car when it's for business purposes, office space, computers. There's so many different things that you can deduct with a business account that it's tremendously beneficial for people who own businesses. So definitely look into potentially having a business. If you have an LLC or anything else, maybe you have a blog or a website, or you have something on the side, a side hustle that you work towards, then consider opening an LLC, because you can illegally avoid paying taxes by utilizing those deductions. Number 5, look at the tax credits that are available to you. For example, there's so many different tax credits out there just for the average person who goes and works a 9-to-5 that you should be taking advantage of all of these. One of which is if you make charitable contributions, that is tax deductible. So make sure you're tracking your charitable contributions so that you can avoid paying taxes on that money. Another one is child credits or daycare. If you have children and you pay daycare expenses or anything along those lines, then you don't have to pay taxes on that money. So make sure that the daycare you're going to tracks those expenses In addition, you track those expenses as well to make sure they're tracking them correctly so that you don't have to pay taxes on those. Another one is student loan interest. If you have student loans, you shouldn't be paying taxes on the interest that you pay on those student loans. And these are just a few examples. There are countless examples of things where you can avoid paying taxes based on the deductions that are offered to you. Number 6, hold investments longer than a year. So if you invest in the market, the best thing that you can do is hold on to those investments for longer than a year. If you day trade in and out of investments, A, you're gonna not reap the benefits of compound interest in the long run, but B, and the worst part about that is, you're gonna have to pay short-term capital gains tax, which is much more than long-term capital gains tax. Now, long-term capital gains tax is if you hold the investment for longer than a year. You're gonna pay significantly less in taxes, and it can be anywhere from 0%, 15%, 30%, depending on your tax bracket. But making sure that you hold investments for a longer period of time is gonna be tremendously beneficial for you when it comes tax time. And then number 7, own your house for longer than 2 years. When we sold our house last year, we made a tremendous profit, well over $100,000 on the sale of our house, and we paid nothing in taxes. Why? Because we owned that house for longer than 2 years. If you sell your house before you've lived in it for 2 years, or it's your primary residence for 2 years, then you're gonna have to pay a significant amount of taxes. Whereas if you just hold it for longer than 2 years, then you won't have to pay taxes on that money. Now, there's caveats to this where the capital gains tax will take into effect even if you've lived in the residence for longer than 2 years, if you make over $250,000 in profit or the sale price is over $500,000. So those are the two caveats to this rule. But if you fall into that category, make sure that you're holding on to your primary residence for 2 years because your wallet will thank you. And here at Master Money, we always recommend that if you're going to buy a house, you truly should be owning that house for 10 years or longer. The reason why is people who build tremendous wealth hold their homes for a longer period of time. If you're jumping in and out of homes, then you're going to be paying the front-loaded interest that mortgages have. In addition, you're also going to be able to reap the benefits of long-term investments if you stay in your house for a longer period of time. Listen, I hope you guys learned a bunch of different ways on how to legally avoid taxes. If you have any questions, leave them down in the comments below. And don't forget to like, subscribe, and also hit that notification bell as well. It truly helps this channel grow. Thank you guys so much for watching this video, and we'll see you on the next episode.